Improved access to rural finance is critical to stimulate investments, private investments in agriculture and related economic sectors. Farmers, traders, agro-processors and other rural enterprises need access to financial services that suit their needs, and they need this access on a permanent basis, not as a one-time opportunity.
Yes, and I think to achieve this rise in investments in agriculture, it's important to recognize that a wide set of financial services is needed. It's not only credit, it's also savings, it's also payments, transfers, and insurance, because all of these tools enable the households and also the firms to manage their daily activities.
When I first joined FAO in 2000, there was a lot of enthusiasm about microfinance, reaching the poor in a sustainable way. But then towards the mid or end of the last decade, it became more apparent that there are also limitations of microfinance, particularly if it comes to financing agriculture and expanding into more remote rural areas. Now, since the food price crisis in 2008 brought agriculture back into the spotlight, the interest in agricultural finance has also increased a lot amongst practitioners, financial institutions, but also governments and development partners.
And now the way we think about expanding that frontier in rural financial markets has a lot to do with understanding what are the needs, the financial needs of those excluded, and really use that information to design more appropriate financial products.
Now, one new concept that has allowed to take a fresh look at agricultural finance is value chain finance. Actually, it allows to look at more actors engaged in agricultural value chains, and this enables to find solutions to better manage and reduce risks, also reduce costs in delivering financial services.
I think other possibilities are coming from the technology side, as there's a wide set of new opportunities to use information management systems and mobile communication technology to be able to design financial processes that reach out to those excluded.
Yeah, in general, our work in rural finance is support to investment operations that can be either standalone rural finance projects, or it can be rural finance components in broader agricultural and rural development projects. Another area of work, important area of work, is to enhance the institutional environment, the policy environment for rural finance. For example, the use of collateral substitutes such as warehouse receipts or crop receipts. The work of AGS in knowledge management and research is extremely useful for our work. And particularly, AGS has done some really important work on value chain finance and also on investment funds in agriculture, and they have been on top of these new trends internationally.
From our side, the work that TCI does very practically in the field is very valuable. A specific example is an ongoing project in Zimbabwe where we brought the practical experience and the knowledge management together to come up with innovative ideas on how to spark new behaviors within financial institutions. But also we collaborate together in broad networks of professionals, such as the technical networks in finance and investment within FAO as a whole, and also interagency through our CAPFIN partnership, where we discuss experiences with World Bank, with IFAD, GIZ, and UNCDF.
Well, the fact that agriculture is again in the spotlight creates huge opportunities for FAO's work in rural and agricultural finance. I think one new area where we still need to work more on is to improve the dialogue between finance practitioners, the finance community, and the agriculture community. The bankers need to get a better understanding of agriculture and agricultural value chains. Likewise, farmers and value chain actors need to understand banks and financial institutions better. And I think this can allow us to progress faster.
We at FAO are able to recognize how regional and domestic markets are expanding, and that creates a huge opportunity, creates incentives for private actors and financial institutions to figure out how to come up with solutions. And I think the timing is right for us to push our efforts.